Hey yo, what's the heart with my people, the crew of the Chico Jarheads? Newbies, you want to join them? Subscribe and drop that title of Viewer of the Tube. My name's Lieutenant Tyler and welcome to the channel who thinks seriously if this heart survived the fall, I would not want its bad juju inside of me.
We begin tonight with breaking news. A helicopter carrying a donated organ crashes.
The chopper flipped on its side. You can see it there. 3 people were on board. The pilot was treated for minor injuries. 2 others had no medical complaints. And then the unthinkable happens. Take a look at this. Crews able to get the heart out of that helicopter. It was then handed over to one of the hospital's medical personnel. Now, as that person leaves the helipad, he suddenly accidentally trips on a metal plate, falls to the ground, dropping the heart. Others were quickly able to pick up that organ and rush it inside.
I pray the patient survived the operation, and it succeeded, but I would not get in a car with them. It's time for Chico Crypto. So the price of BTC isn't going up by $1,000 per day? What is this? A bull run for ants? Well, in actuality, guys, this is a good thing. BTC is finding its footing in unknown price territory and holding there, solidifying that it most likely won't go under again. The quicker and more violent she rises, the harder the fall when the hype cycle is over. So a cool down over this weekend is not a bad thing. It's a good thing as it sets up Bitcoin for a more healthy, sustainable run. So I'm calling it, the Bitcoin game is on. Why? Well, Jack Dorsey of Twitter and their Square put out their Q3 2020 shareholders letter, and it was oh so sweet. According to the letter, the Cash App Bitcoin revenue in Q3 alone was $1.63 billion, with both revenue and profits up 11 times and 15 times for the year. For comparison, Q2 only saw $875 million in revenues. So doubling revenues in just one quarter? I hope you understand that Square's competitors are seeing this. That is why one of them is already making a move to compete. PayPal. This is called corporate game theory, my friends, and it's going to help accelerate this next run. So first, what is game theory and what is corporate game theory? Well, game theory, it's not that hard to understand, the basics of it. It's a study of strategic interaction and decision making between rational participants and decision makers. How do people basically react in situations? Because when it comes down to it, everything is a game. So corporate game theory is strategic interaction between corporations and how they make their corporate decisions. Twitter's Square was the first to make the decision or the risk of diving into Bitcoin offerings at the hype of the last run. They announced they were trialing it, as we can see from this Bitcoin.com article, November 15th, 2017. This was only 30 days before the 20K peak and then the crash, about the worst time Square could have announced it. And they didn't get their service out fully to the public until January 2018 when BTC was a falling and a falling. And this reflected in their Q1 2018 revenue. Q2 2018 price, it was still falling, reflected in the low revenues, and the price fell basically all of 2018, which shows up in the Q3 and Q4 low revenues. By Q4 2018, I bet you to Square and Twitter, the Cash App Bitcoin play might have looked like a failure, but they held strong. And because BTC is a honey badger, it found its bottom. And by January 2019, the price started to rebound and revenues started to grow for Square. We all know the story. Bitcoin's price has been pushing up since, exploding. And so has Cash App's Bitcoin revenues, quarter after quarter. Finally adding on Q3 2020 to that revenue chart because it's not there. Look at that explosion. The Bitcoin risque play is now the smartest move they could have ever made. So now here is where corporate game theory comes into play. Square's competitors like PayPal notice this and now they need to compete or get left behind. Square's initial risky decision and its payoff is now going to influence the other corporate decision makers. Like a domino effect, they are now forced to get involved with Bitcoin or suffer extreme competitive consequences. consequences. So who else is a competitor to Cash App and PayPal on the retail consumer payments banking application side of things? Well, you have to know Google and Google Pay is. So when is their domino going to fall? I wouldn't doubt very, very soon. The writing is on the wall that it's been leaning since this year. March, it was announced that the Coinbase debit card would be the first link to the Google Pay app, allowing users to pay with crypto. Oh, Google, but who else besides them? Well, who else is there in the payment space? Well, the first one to actually announce support for Bitcoin, Stripe. They will re-announce their support for crypto, and methinks soon. Why? July of 2014, they put out such a bullish blog post about how it's going to change the payments game. But guess what? They couldn't hodl on, because by January 2018, they announced they were ending support for Bitcoin. Well, that was a bad freaking move, as they are going to suffer extreme competitive consequences if they do not adapt back to crypto. Which Stripe hasn't left crypto, if you didn't know. Stripe was a seed round investor in Stellar Lumens back in 2014. And if we go back to their ending Bitcoin support article, they said, despite this, we remain very optimistic about cryptocurrencies overall. There are a lot of efforts that we view as promising and that we can certainly imagine enabling support for in the future. We're interested in what's happening with Lightning and other proposals to enable faster payments. Go is an ambitious and clever proposal. More broadly, Ethereum continues to spawn many high potential projects. We may add support for Stellar, to which we provided seed funding if substantive use continues to grow. So, my friends, I guarantee Stripe right now is thinking about how they can re-support cryptocurrency, as they have crypto heads saying, let's do this. If you didn't know, Andreessen Horowitz, A16Z, is an investor in Stripe as well. And as we know, Horowitz is gung-ho on crypto with a deep crypto portfolio. Everyone and their mothers knows it's not a blue wave coming or a red wave coming. It's an orange wave coming. It's almost like a self-fulfilling prophecy of sorts. And you know who has been quiet from, who kind of kicked off this crypto payment support in 2019? Samsung. They added the Samsung blockchain wallet and key store to their S10 phones. You guys remember that hype. What the heck happened to it? They added support not only for the S10s, but future phones like the S20s, as we can see from this guy reviewing it. But listen to what he says regarding the key store and wallet.
Now, I would say the biggest drawbacks to using this is that it's so plain and basic. I've been trading cryptocurrency for the last 5-ish years. If you really want to start getting into crypto, I wouldn't even bother with this. I mean, it's a cool, idea for them to put that on, these Samsung phones, the newer ones. But, if you really want to do the crypto thing, my recommendation would be to use an app like Coinbase.
Samsung's was basic. It did nothing. He recommends going to use Coinbase. So WTF Samsung, what the heck happened? At this February 2019 presentation of the coming wallet, you guys said it was secure payments ready to integrate with soft POS system, like it would be integrated into Samsung Pay. And let me tell you, it will be integrated. If they were thinking about abandoning the plans for full crypto support, they are not anymore with how the markets are moving. So, Google Pay, methinks, will get their crypto announcement in 2021. Stripe will get their re-announcement in 2021 as well. And Samsung Pay may come before either of the two. The corporate decision makers are reevaluating their strategies as I speak. Money just reached the next level, and these companies don't want it to be game over for them in the payment sector. But this is not limited to the payment sector only. Just last Friday, legendary investor and mutual fund master Bill Miller was on CNBC's Squawk Box, and he was focusing on the fact that Bitcoin is getting stronger and stronger each day. He said this: the Bitcoin story is very easy. It's supply and demand. Bitcoin supply is growing at around 2.5% a year, and the demand is growing faster than that, and there's going to be a fixed number of them. He then exclaimed, I think every major bank, every major investment bank, every major high net worth firm is going to eventually have some exposure to Bitcoin or what's like it. Corporate bank game theory is going to come into play, and Miller knows it. October 20th, CoinDesk put out this article titled, Signature Bank Gains $1 billion Deposits in Quarter 3, with notable growth from stablecoin issuers. The article summary says, over the past year, deposits have grown by $15.28 billion, or nearly a 40% increase, according to the bank's earnings release. Signature reports $54.34 billion in total deposits. The big boys, let me tell you, Square grew theirs by $1.6 billion in a quarter, Signature $1 billion in a quarter, and then lower it says, for years, Signature has been one of the handful of banks to offer accounts where crypto firms could securely hold fiat. The New York-based bank competes with California's Silvergate Bank and other institutions for low-cost crypto deposits by offering an Ethereum-based payments platform called Signet, which rivals the Silvergate Exchange network as a fiat on-ramp. Like me say, the orange wave, it's a comin' from all the sectors. Cheers, I'll see you next time.